Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Friday, February 20, 2015. You're looking at a daily chart of the SPY. And the question is this what a runaway bull market looks like? Well, not really, but it sure felt like that today, a little bit anyway. I mean, we came down and tested this pivot high here. That's why I drew this line in here. This level is very important, and the fact that we tested it and couldn't close below, and for those of you that follow the E-mini, this would coincide with around that level that I've been talking about at about 2085, okay? And if we were to close hourly below that level, which would coincide with this blue line here, okay, we should have went lower, but we didn't. The market actually showed unusual, we'll call it buoyancy, and reversed higher, and the S&P had about a 25 handle or 25 point spread today from lows to highs, which is pretty good, but not that all that unusual for an options expiration week, yet a little bit unusual for a Friday, and a little bit unusual based on the fact that we did have heavier volume today, but some of that, especially at the end of the day, has to do with options expiration. But basically, it is a little odd that we basically walked right through the weekly cycle top in the stock market that should have come this week. Of course, it's plus now 1 week, which goes into next week. Could we top out next week for a pullback? Sure, we could. Do I expect it? I still expect it. That's what the analysis tells me. And I only really change my mind when the analysis is off the table. So, for example, what would pull this analysis of the weekly top cycle off the table would be to close next Friday, again, like this Friday, strong without any kind of a sign of a reversal or top in the market. And that would tell me that the cycle basically inverted. That's what they do sometimes. Nothing works 100%. And therefore, this may be one of those times that it's the other percentage that didn't work out on the average, on the long-term average. That's very possible, but in my work, I don't make an alternate decision until the market tells me to. And right now, a day like today gets me thinking, but it hasn't had me exactly change my mind yet. But each and every day in the market, I do my analysis, and if the market tells me something different is going on, then something different is going on. Right now, like I've been saying, the market never gave us a signal to go short the S&P, okay? Maybe other stocks or other indexes, that's fine. If you got a signal, that's fine. But the S&P never gave me a signal to go short. Therefore, I never issued a short trade alert to my subscribers. I did on a different index, and in fact, that index came out with some news after the bell that should send that market down Monday morning. So we'll see how that plays out. But for those of you paying attention to the news and or our subscribers know exactly what I'm talking about. So right now we're about even on the trade as of the close of tonight. But come Monday, it should show downward pressure. Now, on Friday, since normally there's light volume in the afternoon especially, gives me some time to pay attention a little bit to CNBC. I don't watch it every day. I certainly don't watch it all day. I watch it from time to time. Sometimes it's on in the background on mute. Sometimes the TV's just off. Today, I actually listened to quite a bit of the analysis going on CNBC, and it got me to thinking because, of course, the whole thing was consumed with Greece. And the reason the market was up was because there was a deal going on between the EU, the European Union, and Greece. Now, that's in air quotes, right? Because there is no deal. And the interesting part about this is, and I've said this before, and I almost get tired of saying it. It's like so repetitive. But we've read this book since 2010. Okay, we've been reading this book on Greece on and off for 5 years. There's a deal, there's no deal. There's a deal, there's no deal. They're negotiating, they're not negotiating. They're going to solve the debt problem, they're not going to solve the debt problem. They're taking another loan, they're not going to take another loan. Who knows? the bottom line is that the interesting part about the whole thing is, guess what? This is the headline that came out today. Eurozone to provide Greece 4-month bailout extension. So what does that mean in English? What that means is they didn't do anything. So if they didn't do anything, all they did was kick the can down the road like they've been doing for 5 years, okay? I know they have a new parliament and all that nonsense. It doesn't matter. Nothing has changed. They're still going to default on the debt. They've defaulted before. They'll default again in the future, okay? Regardless of what they call it, whether they call it a bailout, whether they call it a loan, whether they call it austerity, it doesn't matter what they call it. Any way you slice it, they can't pay back the money they borrowed one way or the other. Therefore, it's going to be somehow, some way renegotiated into the future. That's called a default. Anybody can call it whatever they want. The problem is Greece isn't big enough to make a global issue of it. So therefore, what we're doing is everything backwards. We're looking at the market and then looking for reasons. Well, that's what they're doing. They're looking at the market, whichever direction it's going. They're picking out a reason why the market is going in that direction, and they're assigning that particular news event to the reason. In this case, it's Greece going higher. Let me give you another example. Okay, we can go get any news we want. We can get bad news or good news. Okay. Let me give you some bad news. Russia cut to junk status by Moody's. Okay, that's some bad news. That should send the market lower, right? No. Here's some good news. Or maybe. Pinterest looks to raise $500 million at $11 billion valuation. Doesn't that look like a sign of a top that we've read that book before? Pinterest shows photos, and they're worth $11 billion because people go to their website and look at photos. Remember MySpace? Sooner or later, nobody's going to use Pinterest. They're going to use something else. They're going to use Instagram or Facebook or Twitter or whatever it is. It doesn't make a difference. It's not worth $11 billion, this company. Here's another one. Snapchat. $19 billion valuation in latest funding round. Snapchat? So this is the one with the disappearing text messages. So you're telling me that they've got a patent and nobody else can have a disappearing text message, or they have so many members that they're worth so much dollar or so many dollars per member or per subscriber to Snapchat. Well, maybe, maybe not, but if I'm Facebook and I'm looking at Snapchat and I'm saying, well, the chances are that about 90% of your members, or maybe almost 100% of your members, are members of Facebook, so why would I buy yours? I don't get it. So we've seen this stuff before. These companies aren't worth that. Remember MySpace. Remember Groupon. Remember Toys.com. Remember Webvan. Remember, the list goes on and on and on. It just doesn't end. I mean, this is not a healthy market that's doing this. However, it is going up. So we'll take it for what it is. We respect the bull market. The trend is higher, and we respect the trend. We're just going to take it one day at a time, and we'll report back on Monday as it relates to the stock market. But I just wanted to throw my 2 cents in and just, give you the idea that, just because the market's going up, it's not because of Greece or it's not because of some other reason. The market's going up because this is a bullish season. Okay, I still think we need a pullback to go higher, but make no mistake about it. Remember, I've said this many, many times. The market's going higher in 2015. In the next few months, we're going to be higher than we are now. I've been telling you that. That doesn't preclude us from having some kind of a setback, pullback, correction, something like this to scare some people away, and then we build up some momentum to go back in the other direction. Okay, that should happen, and eventually it will happen. Think about it like this, right? Here's a market that's in a runaway bull market, all right? So you're somebody that's running a marathon. You can't run out of the gate at full speed, okay, and run 26.2 miles or whatever it is without, pacing yourself and resting and taking a drink along the way. And guess what? This is a little bit too far, too fast without taking a glass of water from one of those guys on the side handing it to you. So, eventually we're going to pull back, but I know what it feels like. I get it. If you're short the market, I get it. I've been there, but this isn't a shortable market right now until the market gives us a signal that it's going to turn in the other direction. You got to change the complexity of the market. Right now, we're just in a straight line up. Until further notice, it's an uptrend. All right, I know this is long in the tooth, but we're going to run through some other stuff real quick. Gold, there's not much doing in gold. Gold was down a little bit today. It was up, it was down, it was up, it was down. And basically what it's trying to do is it's trying to carve out a bottom. And what I think is going on here is I have a number in my calculations, and I'll talk about gold futures. Right now, gold futures, and this is Friday night, is 1203.40 on the close. I think as long as we stay above 1191, okay, on a closing basis, okay, this market will take off to the upside and have some momentum for a few weeks. Okay, that's the line in the sand. That's the number that actually intraday, I'd love for it to touch that number and reverse off that number, kind of like one of these. Okay, and then the low on this day was, I think, 1195 or 1197. I think 1195. And I'd like to see 1191 intraday, a reversal like this, and then I think we go higher from there. So it doesn't have to happen, but it's trying to carve out a bottom. But that's what my work on the gold futures contract is telling me in terms of price levels. Okay, let's go over to oil. Oil was up, it was down, it was up, it was down. It was up and it was down. So basically this is a daily chart of USO. USO is still kind of putting in a bullish pattern here, so there could be higher prices ahead. I don't have any lower targets like I had earlier this week. I don't have anything like that, so and I don't have any upside targets. I have a maximum upside that brings the USO up to this 21.5 to 22 level, but it's going to take a little bit to get there. But if we put in some kind of a couple of up days in a row and we close above this high here on the USO, which is 2019, that's going to mean something. So we'll see what happens, but I don't have any definitive price targets due for next week like I did this week. If we close below 52, expect us to run right below 50. I don't have anything like that on the horizon, but if something like that does come up, we'll certainly discuss it here. Bond market had a wild ride today. I'll bring up the TLT because when they were talking about all that nonsense with Greece and the press conference with the EU and the Greek this and the Greek that, the bond market whipped around. And if you want to look at the intraday chart of the TLT, this will give you an idea. Look at this. Up, down, all the way down, recover a little bit. Couldn't decide what to do. This is the 20 to 30 year treasury bond. And if you want to look at the flip side, just for viewing purposes, this is the yield. Well, this is the 10-year yield. But same thing. I mean, you can see that the yield went wild today when, excuse me, when they were discussing all the Greek news that amounted to an extension, kicking the can down the road for 4 months. And here's the funny part about it is they have a lot of debt due in 5 and 6 months. So they kicked the can down the road. So mark my words, we're going to be having this discussion in about 3.5 months, 3 months and 3 weeks, and 4 months from today. So stay tuned in. Mark your calendars. Discussion on Greek begins in 3.5 months when they have to kick the can down the road once yet again. Or yet again, once again. I don't know. Either way. So the bond market went wild with the Greek nonsense. Yields went up. Bond prices went down. And that's about it. So, we're pretty much in a holding pattern. If the market's going to go up higher Monday and Tuesday and Wednesday, I got news for you. Unless it's an individual stock that I want, or an equity or some kind of ETF that I want to take a position in for a particular reason or a trade setup, this S&P is going up without me because I'm not hopping on a runaway train, with no brakes. It just doesn't work like that. We all know what the pullbacks look like, and then we hit our head like we needed a V8, and we say, oh yeah, well of course the market has to pull back, and then of course nobody's surprised when it does pull back. So pullback's coming. We just have to wait and see. Let the market tell us when it's ready to pull back and what it's going to do. Once we begin to see it unfold, we'll begin to make some calculations and try and provide some downside targets. From here, I'm David Frost. Hopefully this has been helpful. This has been another episode of Common Sense Market Analysis. Thanks everyone for tuning in. Have a great weekend.